Hello and welcome to Business Incorporated. We're coming to you live from Channel's television headquarters in Lagos. I am Bolaji Akinwale. Today on the program, Samsung shares fall as firm says users should not use its flagship Note 7 phone on health grounds. Also on the program, EU is urged to do something to stabilize the bloc in the wake of Brexit. And later on in the show, GSK is to sell anesthetics to Aspen of South Africa. We'll begin with the story on Samsung, where its shares fell sharply on Monday, hitting a two-month low after the firm urged users not to buy its flagship Note 7 phone and exchange the device due to fears it might catch fire. The South Korean company's shares dropped more than 6% on Monday. Samsung recorded 2.5 million phones last week after reports of the device exploding during or after charging. Airline passengers were warned by the U.S. authorities not to use or charge the phones while on board. Aviation authorities in several other countries and individual airlines have since then also banned the use of the devices on their flights. And European stocks were sharply lower in morning trade today as investor sentiment was rattled by concerns that the U.S. Fed could be considering an imminent interest rate hike. Conrad Busen is DWTV financial correspondent. Joins me from the Frankfurt Stock Exchange to take a look at how the markets are doing at the moment. Good afternoon, Conrad, and welcome to the program. Now, feelers from the U.S. Fed on the possibility of a rate hike in the nearest future is sending jitters to the markets. A Fed chief is quoted as saying that the U.S. economy has proven to be more resilient to risks and that gradual tightening is likely to be appropriate. For how long and to what extent will this impact be felt?
Bolaji, I have to admit, it's impossible to really say exactly how long the impact will be and how strong the impact will be. It's impossible to really give a comprehensive and reliable forecast on that. And this is basically why the markets are so nervous. You know, investors are not so concerned that maybe soon in the United States loans will cost 1/4 of a percentage point more interest. What people are concerned is about the potential implications this will have on different types of investors, on different types of assets, on monetary policies elsewhere in the world, and on the way all this is intertwined. This is what is so important for people on the markets. Take, for example, and if we look at what the, or if we look at examples how this will impact the markets, take for example short-term oriented investors who took the opportunity of cheap cheap money from the Reserve Bank and invested this on the markets. Those investors will likely sell shares if rates in the US will be rising. On the other hand, there are long-term investors who would say, well, the fact that the Federal Reserve thinks that interest rate hikes are something that the US economy can live with is positive, and that gives those investors a reason to invest. And that's why it's so difficult to predict what's going to happen and how strong the impact will be.
Also, let's take a look at how commodities are doing. The stocks have also come under pressure following a fall in oil price and the fear that the U.S. interest rate hike will strengthen the dollar. There are concerns that as a result, it will be more expensive for companies to buy dollar-denominated commodities. What is your perspective on this issue?
Well, it would only become a problem if also, demand for the commodity would increase, so that not only the price for the currency increases, the currency that you need in order to be able to buy the commodity, but also the price for the commodity itself. And that's, a reason why, or this illustrates how difficult it has become to manage global risks like commodity prices. Hedging against currency risks has become much more delicate and much more complicated recently. And that's why it's so important to see what is going to happen with the Federal Reserve and interest rates in the US next week. The interest rate in the US, the key interest rate, is such an important benchmark for, purchasing managers, commodity traders worldwide, that if we know what's going to happen there, and if this is communicated well, then one important benchmark can be relied upon.
Okay, Conrad, just before I let you go, what is your outlook on the markets this week in terms of earnings and economic data that are in the pipeline?
We don't have a lot of earnings reports due this week, but we do have a couple of events which are important in terms of economics and monetary policy. On Thursday, the Bank of England's monetary policy makers will get together and decide whether or not to leave interest rates in the UK at 0.5%. Then later this week, a lot of countries will report about industrial production. China tomorrow, the Eurozone on Wednesday, the United States of America on Thursday. And we'll also get updates on retail sales in the US and in China. And believe me, Bolaji, all this data, of course, will be discussed on the markets in light of next week's Federal Reserve meeting and the policy decision in the US.
I'm sure all eyes are on the Janet Yellen-led Fed, talking about how it will drive monetary policy decisions. Thank you so much, Conrad Bielsen, DWTV financial correspondent, reporting from Frankfurt. We're still sticking to the market, this time in Asia, where shares actually tumbled after a sharply lower finish for major U.S. indexes last Friday amid concerns the central banks, particularly the Fed, will become less accommodative. The S&P 200 closed down 2.24% at 5,219, weighed heavily by the energy sector, which was down 3%, the materials sub-index, which shared 3.2%, and the financial sector, which was lower by 2.01%. The Japanese benchmark index, the Nikkei 225, ended lower by 1.73% at 16,672. South Korea's Kospi finished down 2.28% at 1,900 points from levels above 2040 that were recorded last week. And mainland China market slumped. The Shanghai Composite actually closed down 1.8% at 3,020, and the Shenzhen Composite shared 2.6% to close at 1,977 points. In Hong Kong, the Hang Seng slid 2.85%. And a Volkswagen engineer, James Liang, is pledged guilty to involvement in the German car maker's diesel emissions scandal. Liang is the first to be charged as part of the U.S. Justice Department's year-long criminal probe into the firm's rigging of federal air pollution tests. He pleaded guilty to violation of the Clean Air Act, a wire fraud count, and a consumer fraud count. Mr. Liang, who is a German national, worked in VW's diesel development department in Germany from 1983 to May of 2008 before moving to the U.S. It was part of a team of engineers based in Ann Arbor, Michigan, that conducted emissions tests on the diesel engine, the heart of the controversy. It could face 5 years in prison, although by cooperating with the U.S. Federal Reserve or federal government, it could reduce its jail term. And gold was little changed on Monday as a fall in the stock markets helped to win its safe haven support against the view that the U.S. Fed will raise rates as early as this month, following upbeat comments by the central bank officials last week. Spot gold held steady at $1,328 an ounce. Hawkish comments from Fed officials kept hopes alive for a September rate hike, despite a recent spate of disappointing economic data, including only a modest rise in U.S. non-farm payrolls. after Boston Federal Reserve President Eric Rosengren spoke last week about a possibility of a rate hike in September. That actually pushed up the numbers to 30% from 24% before his comments. We'll go on a break now. I'll be right back.